discussion on market forward and how do the opportunity look like right now in midst of all these factors. Irani of Tata Investment Corp is also joining us along with James Knightley, senior economist at ING. Gentlemen and the lady, thank you so much joining us on the show today. Mehrab, I'll start with you. You're coming on the show after a very long time. How are you analyzing things right now? We went to almost 8,400 and retraced back to 8,000 levels. In the near term, what are the factors at play?
Yeah, good evening, Ajay. If we see the second quarter results of most of the companies have already come, and if we see there is a degrowth in the top line sales of Nifty companies by almost 7%, while the EBITDA growth has been around 6% and the bottom line growth by around 2%. So on one hand, if we see the top line is declining, but the bottom line is expanding, that is only because of the raw material cost which has come down, and the gross margins today are almost at a multi-year high. So either we can take it positively, we can see that okay, once the demand recovery comes back in the economy, and there will be a lot of delta in the earnings. On the other side, we can take it negatively also. We can say that today the whole expansion is only because of the benign commodity prices and the expansion in gross margins. And once the commodity prices stop falling, there is no actually real demand uptick in the economy happening. Also, if we see in the top line, see if a metal company reduces, then we can understand because the output price of the metal is coming down. But say an FMCG company, if there the top line comes down or if the growth comes down, then it is a cause of concern. It means that there is some kind of demand problem. If we see the valuation also, today we are trading at almost around 16.4 times forward price to earning ratio with a 2.7 times book value and an ROE of around 16%, which is slightly below the long-term average of 17.5%. In a global scenario also, if we see today India's market cap is almost 2.3% of the global market cap. And while if we see from last Diwali to this Diwali, the global market cap has actually expanded by 1% or $0.7 trillion, while India Nifty has almost come down by 4.5%. So we have slightly underperformed on that turn. So therefore, I think that we are at a kind of a crossroads. The earnings are going forward are very important, and what the government takes and what globally happens are very important for the market direction going forward.
Right. Mehrab, we'll talk about each of those factors in slight more detail, going in the show. But you spoke briefly about how global investors...
Mehrab, this question is for you. Earlier you were making a point about how while one eye is on local events, global events are equally important. I want to ask you whether you believe that we are indeed going to see a lift-off from the Fed, come next month.
Yeah, if we see once this calendar year had begun a few months back, there was a lot of expectation that a lot of the central banks across the world, whether it is the US Fed, whether it's the ECB, whether Bank of Japan or the Swiss Bank, will actually little bit tighten monetary policy. Particularly the US Fed was expected to raise interest rates. However, currently as we see, I think most of the consensus analysts are expecting that in the year 2015 calendar year, there will not be any rates from the Fed. And I also think so, and I think now the raise will only come in the year 2016. So if we see in that sense, we have to take note of the global thing. Also, if we see the China thing, I think that is a quite severe thing and we cannot just brush it aside. The fall in the commodity prices is severely affecting the global economy, and a lot of commodity producing countries, a lot of oil producing countries are actually facing problem. I was reading some report where it was mentioning certain Gulf countries like Saudi Arabia, etc., might actually come in serious problem over the next 3 to 5 years if oil were to stay around $50 per barrel. So yes, we have to look at the global factors. As far as the Indian RBI is concerned, some may argue that it has been little slow in reducing rates, but I don't think so. Actually, I think the RBI has been monitoring the situation very well, and they have taken action at, I think, reasonably good time. And going forward, I think the RBI will have a keen watch on the currency movement also, because I think that has become very important after the Chinese actually devalued their yuan. So I think that RBI will watch before reducing further interest rates going from now onwards.
Right. James...
Mehrab, off late, everyone that we've had on the show is making a case for how we're going to be seeing lower levels from here on, and how it's so difficult to actually be bullish in a market like this. Is that an argument that you buy as well, or are you a little more optimistic perhaps?
Yeah, if you see, it is very easy to make a bear case at this point of time, because the earnings which was expected, that is actually not coming around. The growth is not happening. The corporate capex is not picking up. We saw certain capital goods and engineering companies actually lowering their guidance. So it's very easy to make a bear case scenario at this point of time. However, I think if we take a slightly longer term view, And if we believe that finally the demand will come back in the economy and the capex cycle will pick up and the government will do something, what measures they have been taking, they have been talking, I think finally they may fructify over the next 12 to 18 months, then I think at the current valuations and whatever corrections may happen, I think we should be more positive and look into buying. As far as the levels are concerned, I think a few weeks back we touched around 7,500 on the Nifty, which was I think discounting forward earnings by less than 15 times. So I don't think in the near term we may break those levels. I think we have already made a bottom as far as the short term is concerned, and any fall I think should be looked as positively for making good long term portfolios.
Okay.
Mehrab, you are someone who really reads a lot about how global developments are panning out. Up till now, what has been your sum total of observation on China? How bad are things over there, and do you think it will continue to weigh on overall growth estimates for the rest of the world, including us?
I think the China situation is not as good as we think, and sometimes we may underestimate the actual problem which is in China. And I think it is more of a long-term structural in nature. And the way the commodity prices, etc., have corrected after the China fall, I think we should not just ignore it. It may have long-term implications for global growth and global development, which we are already seeing. It would be no doubt positive for India over the long term, but yes, in the short term, it will affect India as well because of global flows, and everything will be affected. Also, if we see, the metals have been very, very badly badgered over the last few months because of the China factor. And it is very difficult to make a positive case for metals at this point of time. I am not trying to do that, but what I am just trying to say is that today if we see the US economy and the US infrastructure, which is almost like 25-30 years old, and currently they are going through some kind of problem, and once the situation in the US improves over the maybe next 18 to 24 months and they decide to just improve 5 to 10% of the infrastructure, then I think there will be a lot of incremental demand from metal from the US side. Maybe not today, but if we can see after 18 to 24 months, there is a possibility of that happening. But yes, the China factor, I don't think we can underestimate, and it may have little implications for the global economy over the medium term.
Right.